Hey again, this is the third of four parts from our discussion with Czempoyesh. Here he talks about whether or not you should be starting a holding company or just buying in your own name, at least from a lender perspective.
uh, just changing up a little bit. I know we talked a little bit last week about holdcos, and
Yeah,
I understand that this is a better question for an accountant, probably, and maybe even a lawyer.
sure.
But just
It's a
from
great lead-in.
your standpoint, if you could speak to it for maybe even just a couple of minutes, because everybody asks that question. Any investor seminar we've ever
Yeah,
been involved with. When, should I buy in my own name? Should I start a holdco right from the beginning? Should I wait till I have five properties to start a holdco?
yeah. Um, it's a very large question, and it's a very sophisticated question, and hence the reason for, sometimes an accountant to speak on it. However, an accountant will give an accountant's perspective. And when we're looking at setting up a proper financial plan, which includes real estate investing, we have to look at our plan, our taxation, our personal situations very carefully with a number of different professionals that will speak on it. The lender, so the mortgage broker, the lender, the lawyer, the accountant, and the individual that's looking for, estate planning, right? So it's a big question. And we kind of hear, we kind of hear on the street, so to speak, that, I really should have a holding company. And a lot of times, what reason do you want a holding company for? And people don't know. So if I ask somebody, why do you want to purchase, or why do you have a holding company? Many times they can't answer me. They've heard it. They heard it's the right thing to do, right? So before you go doing something that's rather sophisticated and complex, you really got to know why you want to do that. And the main benefit for something, for reasons there, now there are numerous benefits, but the main benefit when you really dig into it with a holding company is long-term income or tax. I don't want to call it tax avoidance. That's not what it is.
Tax sheltering.
Long-term tax planning, where you're keeping investments and income inside a corporation and you don't have to take it out each and every year. You can leave it in there, it grows, and to become taxed at a later time. Tax deferral. So let's say tax deferral, right? But you're getting into a rather sophisticated tax planning situation. One of the other things that people tend to do with corporations is they think that by putting something in it, by having an incorporation or putting something in a holding company, you have no liability, right? So you're shielding yourself from creditors through no liability because the corporation is borrowing the money. And there is no lender out there that's going to lend you money for mortgage money on a property that you have in a holding company without your personal guarantee. So it renders it a moot point, is that you cannot escape the liability to the creditor by putting something in a holding company. So it's a myth from that respect, right? So many different aspects here, but there's a couple of aspects for you. Thirdly on that is lenders do not want to lend you money to a holding company because they feel it's more convoluted on their exit strategy. If they ever have to get the property back for power sale purposes, default management, they have to take that back. It's harder for them to deal with the holding company and you still are personally guaranteed, so you're still on the hook, but it's more difficult for them to deal with. So they don't want to lend money to a holding company. So more and more lenders now are not lending money on properties that are being put in holding companies. So it is increasingly more difficult for me to find a lender that will lend you money on a holding company. And here's a big thing, and I think it's a massive problem for people that are trying to borrow, is we want to look like who the lender wants to lend money to, right? We want to resemble the perfect borrower. Sometimes people feel it's a right for them to borrow money, and boy, it sure isn't, right? We want to look like who the lender wants to lend money to because we get favorable terms and rates, right?
Yep.
So holding companies are becoming increasingly more difficult to get mortgages on, period, because lenders are shying away from it. Yes, we can still find it, but it's very difficult, and typically you're going to be impacted on the rates and the terms that you get, right? Secondly, it's typically not as advantageous to somebody as they think it is. Thirdly, they have to personally guarantee anyway. Fourthly, we have to do accounting on it. So now you have another tax return. So you have increased accounting fees. So sometimes the accountant will advise you to throw it in the holding company, but they're kind of self-fulfilling income for them, right? Because they get to do the tax return on it. But outside of a very sophisticated tax deferral situation, which I have been involved in, and it can work. I don't want to kind of poo-poo on it entirely, but it can work. But it just usually isn't what people think it is when they get into, and a lot of times they don't really know why they want to do it that way.
Yeah.
And I think the main thing, from my perspective personally, it's just becoming harder and harder to do. And in that, because of that, when you get into more than one property, one or two properties, and you have a holding company now, you've now made it even more difficult for you to borrow the next one. So when we speak about make it easy on the first one, make it easy on the second one, make it easier in the beginning going forward, having the holding company in there makes it harder right out of the gate, makes it harder from the beginning, makes it harder in the middle. And if you get to maybe that fourth or fifth property where we're trying to get really good terms on it, we may have to go to the secondary market to get you the rate on that one because you've got the holding company, and now makes it more complex even in the middle of the game, so to speak, if that makes sense. And maybe that raises a question. Maybe it makes sense. I'm not quite sure, but that's my take on the holding company. You need advice from multiple parties to make that a proper decision, and to realize from the mortgage provider, it is going to be more challenging.
Yeah. See, that's the point I wanted you to make there, because we always think that it's a great idea as far as liability goes and whatnot, but and tax deferral. We understand we understand those prospects, but yeah, if it's going to make it more challenging and limit our ability to buy an extra one or two or three properties, then maybe you need to weigh those options and realize that it might not be the best thing overall, right?
I think a key takeaway too, Vic, here is that, part of the questions that you're asking me, they arise out of the last couple of years. Because people, as you have, the clients and the people that you're dealing with that are purchasing property have recognized that, hey, it's getting a little harder to borrow these days, right? Like it's very new that 3-4 years ago, and sometimes I lose track of time because it passes so quickly, but I'm going to arguably say, for argument's sake, 3 or 4 years ago you could buy as many properties as you want. We just did a debt service calculation, right? Like we have a spreadsheet, we still have them, a spreadsheet with your ability for the income coming in to service the debt or cover the debt. We deal with debt coverage, right? And the calculations change with how many properties you have, but it's relatively recent that we were capped at 4 or 5 properties. This is relatively new, right? So increasingly, what we're seeing is becoming more difficult. The lending institutions are tightening the guidelines, and they are making it more difficult for us to buy in general, right? The stress test that we have to deal with first off. Our debt coverage calculators now have higher, so what we talk about insurance or maintenance costs that we have in our calculators. And what I'm seeing is that a lender will, TD will send me a debt service calculator today, First National will send me one tomorrow, and I'm seeing them, their qualifying is getting tighter, right? Yeah. So to comment on that, when we're talking about things that are easier for us, times change. And it was easier to buy in holding company names. It was easier to buy 10 properties, as short a time as 4 or 5 years ago, right?
Okay.
So I think the key takeaway of that is it's becoming more and more important to make the first one easier, to make the second one easier, to make your life simpler, to dumb it down, so to speak, potentially avoid the holding companies, that type of thing. We don't, the sophistication and the more complex we make it, the more difficult it is. And then we ask the question, why is it becoming? Why can't I do this now? And a lot of it is, why can't I do this now? Because I did it then. I did it back then. I just did this. I did this 5 years ago. I can't do that today. What's up? Right?
Okay.
There's just one more video in the series. Just let us know if you have any questions on this one. Talk to you soon.